Good morning.
Hey
He's
Nick,
sneaky.
how you doing, Nick?
I'm doing great. How about you guys?
Good. Are
We're
you? Are you
talking Alibaba, and I was saying I might get on board with this one. What do you think of Alibaba, Nick?
I divorced them. Remember?
He divorced him now. He's done with Alibaba. Not talking Alibaba anymore.
I'm done. There's too much smoke. So until they address it head on, the issue of all these, accusations and allegations or whatever, why am I going to waste my time with it? Because for me, I'm a credit spreader. Headlines just kill you. You can plan, you can study, but you can't plan around headlines. You just have to leave room for errors. And we have enough headlines to deal with on the global market area, so why do I need to add another layer of headlines in Alibaba? But if you want, we can look at it for sure
okay?
and see
Yeah.
Yeah, give
what's
us
it
your
you think.
technical look there, because we were just looking. I was arguing right before you popped on there and snuck in on us that we kind of had almost a double bottom here. You had a nice move up. We've pulled back. We're digesting that move there from a week and a half ago, and I'm wondering if the bulls don't start to get some life here on Alibaba again.
Well, the open interest is it's got some sort of a magnet around the $90 and
Okay.
resistance at 91 and higher, and not a lot of support. So I guess the support comes from the faith in it. At least for this week, this week on Baba. Technically, I haven't looked at the chart in a while. It looks like it was trying to break out from the 91 area. It had three huge candles recently, but I think that was on the back of the markets in China, which adds another layer to the casino feeling on the stock because of what's going on there. Up 5% and up 2%, down 6%. Those are daily moves on the market. That's it's just too hard for a credit spreader to game, and there are easier ways of making money. Given the fact that we've been meandering for months, the easiest way is to just throw iron condors on the reliable um, ranges that we're seeing. And I was listening to your list. You're running through that list. That was very, very nice. Chevron, you guys were all concerned about it, but it's showing a nice channel. So iron condors could have worked there. I haven't looked at the premiums or anything, but one would want to look into that. It's got a nice defined channel that's going kind of sideways.
Do you want to explain an iron condor just using Chevron?
Sure. An iron condor is when you have clarity on a particular range. A stock is going between two ranges, to a range of prices. And so what you can do is you can go bullish that ticker. I say ticker because it could be an index, and do a credit put spread, which is a bullish element. A credit put spread. Let's say Apple is 130, and you don't think it's going to be at 120 in the next 2 weeks. So you put together a credit put spread at 120 and collect a premium for that. And it's not a random process where you pick it. It's more of a science for at least for the ones that do it properly. And that gets you a position that is long Apple. So as long as Apple in the next couple of weeks closes, expires at or below, but higher than that price strike you sold, then you keep that premium. The money goes into your account as soon as you set the trade, but the money really isn't yours until the trade expires or until you close it. So that's the bullish element. That's the lower part of the iron condor. And then you sell the credit call spread to say, okay, Apple's not going to be 140, and you collect the premium there. So as long as Apple stays between 120 and 140 in the next couple of weeks, I'm using these as random numbers, by the way. These are not exact numbers to play for the next couple of weeks. They may be, but I haven't looked at them. So then you keep the premium. It sounds like it's pennies, like if you pick up 15 cents on a dollar-wide spread, but the yield ends up being like 25, 30% after you close them and after fees in 2 weeks. I mean, where else can you get returns like that on trades that are theoretically 85% chance of success, let's say?
Moving on to the broad market here, boy, you talk about a headline-driven market and relief rallies. Boy, that's just what this market's defined. Now, here we are. We traded down to 2094. We're 12 handles above that. Just had a dip under 2100 here. Where are you at this point? Seven lower highs in the S&Ps. You would think there's like a correction is imminent, but boy, these buy the dippers are relentless. Give us your long-term outlook for the S&Ps and the broad market.
My outlook really, really has not changed. I expect a creep up. I don't expect a crash up. but we could correct. So what I'm doing is I'm still doing what's boring. I'm still leaving room for upside. I'm still shorting the pops as long as I can identify the reason for the pops. Relief pops, like you've been calling them, that's true, because they're always a relief that something bad did not happen rather than a new addition to the fundamentals that say, hey, we're going to get upside because, this or that. Had they come with more QE, okay, that's the reason for more upside. Had they come with more earnings reasons, higher earnings, and that's fundamental change. But popping because Greece may get a deal. I mean, yesterday we popped pre-open on the expectations of a rumor. We didn't even have a rumor. So it is ridiculous. So last week I switched to headline mode trading rather than just sentimental trading. Now, sentiment trading is bad enough all its own because you're not trading fundamentals, but now you layer the headline. So whatever I do now, I just leave a bigger room for error because I'm not playing the weekly in the current weeks because I don't want to be a slave to a pop on Friday. Like, let's say on Friday, I think Draghi speaks today, and he's always market bull. And if on Friday we get a news of a great deal, we're going to rally. And on top of it, if the market likes the labor report, we're going to rally. So I don't want to be caught up with these swings that make no fundamental sense. So I do play the weeklies, but not the current week they're expiring.
Nick, you talked about sentiment trading just briefly there. You just mentioned it. And what do you use to gauge sentiment? What tools are in Nic Chahine's toolbox for sentiment gauging?
CNBC, I guess. I'm not sure.
A lot of times too. Are you a CNBC fader?
No, I just watch it because it's what everybody watches. I don't watch it to find trades. I just want to see but you can see sentiment in the actual price action. I mean, if you pull up the last 10 days price action, you can see that this morning's dip was worse than last Tuesday's dip, which was the worst of last week. So that tells you that there's absolutely no conviction in the long thesis here. The bears are not winning. The bears are not even on the field. The bulls are hitting the sell button at the drop of a hat and then buying themselves back up. So you know who's winning are the people that are collecting the commissions. So because
and the people who are writing options like you.
Right. Well, yeah, the ones that are doing it correctly, the ones that are not are getting blown out because it's too whipsawed. And if you don't stick to your rules of doing a proper credit spread, then you're going to get blown out. It's too tempting. The premiums are too high to do tight ones. So, but if you think about it, anybody that's listening, if you're ever doing a credit spread and you're collecting 40 cents on a dollar-wide spread, just think about it. Somebody's giving you almost a coin flip there. There's a reason why they're paying you so much premium, because there's a high degree you're going to lose. A coin flip is Vegas. So coin flip, a 50% chance of success is unacceptable. It's zero to me. So step away from that 50 and get down to the teens, because that's the more realistic high chance of success that will give you longevity in the game. Otherwise, you're going to get whipsawed too much and you get up spinning your wheels for nothing. So yeah, sentiment trading makes it a challenge for me because now I have my fundamentals, but I got to leave room for how the market feels. But the last couple of weeks, we're starting to get some guidance from currencies. So I have 4 things I'm watching. I have currencies at the top, small caps on the second. The battle is in the small caps this week, whether anybody says it or not. Apple and the financials.
Okay.
So,
yeah, let's look at the IWM here. That's showing some resistance too, as well as the S&Ps. What are you looking for in that? Wow, well, look at that, 4 highs in a row there in the Russell 2000.
124.5 is where the battle is. The bulls have a chance to mega breakout, and overnight, the battle just spilled into the RUT. There are some mega hopeful. They did it on the wrong day, apparently, because it was looking ugly this morning, but now they're recovering, I see. So the RUT, 1293, 1300, but that battle showed up overnight for me. But the IWM for the last 2-3 weeks has been about the same line. I marked it like 2.5 weeks, maybe 3 weeks ago as X marks the spot. And right now it's 124.5. That's where the battle is. And the bulls have had the red carpet laid out for them for a mega breakout for a long time, but they just haven't been stepping through that door. They've been shy about breaking out. That's why I'm saying it's not the bears that are pushing down. It's the bulls that are just backing off at the drop of a hat because there's a lack of conviction. That's my interpretation of things.
Nick, transportations, IYT. If you're a Dow theorist, this is not good here. The airlines have been showing weakness for quite some time. Had some weakness in the railroads. I know you don't follow the Dow theory here, but boy, does this bode well for the market here? The transportation averages.
No, it doesn't. And you say I don't track it. In fact, I do just
Okay,
because
sorry.
That was
no
number
worries.
5 on his list.
I'm going to throw a picture in your stream here if I can do it fast enough, but I can talk while I'm doing this. I've been watching the transport for a while just because of the divergence that had been going on. Here's the IYT. Hopefully it showed up. But anyway, it's been threatening to break down for a while, and it's kind of like fizzling into a breakdown. It's like halfway through my low target of like 145. And we have had so many bounces on a bottom area that's between 154 and 152 and a half, and it finally broke below it. And where does it go from here? Oil is gaining strength. I always thought that if oil breaks out through the 60s, it can get to 70 pretty fast, but it's failed every time it did that. So they've had red days on red oil days. So I'm not sure what else is driving the transports down. Airline had a bad day one time, and yesterday they kind of had a decent candle. So there are other things playing in the IYT, for example. So, but I'm not sure if it's going to. I guess what I'm saying, it could be decent news for the market because it's already almost in correction territory. Yet the markets are still hanging in there. You know what I mean? So if this was it for the IYT, then the markets are just fine.
What platform is this on, this chart that you brought up here?
This is Thinkorswim.
And you can write, like I see your notes here on the left.
Yeah, I leave the notes so I can remember what my thoughts were, and I'm laying myself out as an open book right there. You can read my notes all the way back to April.
And you can,
We just show it to the whole world.
Yeah, you can do that on. You can do that on the. They allow you to, or they have the capability
Yes.
to write. Wow.
Yes. Under profit, if you use that platform, there's an advertisement for Thinkorswim right there.
Okay. All right. Moving on here, Nick. Any other issues that are on your buy or sell radar for today's session?
There are a few things that people can play as far as lottery tickets, but I've dialed them down because they haven't. People mistake them for, hey, you're doing this, you're long this. No. When I say a lottery ticket, it's literally throwing money down the drain. And there's some money on the IWM. We just talked about it. There's a tug of war between a mega breakout and a correction. Somebody's banking on a mega breakout this week, and other people are banking on a 115 value for next week. So who do you want to follow? So if you have a portfolio, this is where you check your portfolio and say, okay, if I'm long everywhere, what's wrong with taking a short something lottery ticket? This could double as a lottery ticket for fun and some sort of protection in case of an oh crap moment happens. So if you want to take sides on the IWM tug of war, you can take a cheap call or call spread or a cheap put spread, depends on your portfolio. I always say you got to balance out your portfolio. So how do you do that? An easy way is if you imagine the worst case scenario for you, and then the best case scenario the other way. So a drop to a 0 and a run to 100. If you're okay with these numbers, then you have a balanced portfolio. But if you're like about to throw up on either prospects, then you might want to balance it out a little bit.
Nick, I've got to ask you here, you did mention Chevron. You mentioned how some of the individual components look like they might be in channels that you can trade here. What do you make of the fact that crude is actually starting to come up towards the highs, yet some of these individual oil stocks here have not really bounced with the recent rally overall in crude? We look at ExxonMobil and Chevron, and they're kicking down near their 6-month lows here. Is that concerning to you that the individual oil stocks, and we're just looking at the two main ones here. There might be some other ones that have rallied with oil. But is it concerning to you that they're not bouncing back as much with oil as they did in the past?
I don't think so, because if I remember correctly, you guys were saying they haven't dropped as much as the oil dropped.
True.
So,
but even looking at like Transocean here, like rig, for instance, and this
Yeah,
one obviously got murdered.
now we're getting into the front quote. I'm putting that in air quotes. The frothiest parts of the. If you go to the big guys, and they haven't moved as much because they have some sort of a fundamental basis behind the floors that they've established in pricing. But when you're getting to the rigs, I don't know if you can do the same. So the fact that rig hasn't rallied back with oil. Maybe it's because they realize that the oil prices have been a price war, a war of economics rather than fundamentals. But I really am not an expert on how it translates into their actual bottom dollar, especially that there are so many nuances in what they do, what they provide, and how they do it, and where they do it. So I'm not the expert to ask about the specifics of the smaller guys, but on their bigger guys, you can game the ranges.
See, I'm just looking here at the last week, and a week ago we were down at $56 oil. Now we're up here at 60 and a half, which we're trading over 61 here this morning. But even looking at like Baker Hughes hasn't bounced back. Halliburton hasn't come back up. ExxonMobil, Chevron really haven't rallied at all in the last week. We've had a 7 or 8% pop here in the last week in oil, and none of these oil stocks that I'm looking at here, I just looked through about a dozen oil stock charts, none of them have really even bounced off of their lows for the week. So that's just what my concern is here. I don't know why that the individual oil stocks aren't bouncing with oil now, just in the last week.
Yeah, I can't make any predictions on why they're not moving or any explanations of why they're not moving up or down. But all I say is in a rigged market, pun intended, in a rigged market, you really can't use logic because it's artificial, right? The oil price got depressed artificially because somebody wanted to bring it down, OPEC mainly. So I can't really apply fundamentals or logic to it because it's artificially being moved one way or another. So they accomplished what they wanted to accomplish. I mean, I've heard a couple of times experts say, well, they clearly didn't work. What? What do you mean it didn't work? They absolutely, clobbered a whole set of new entrants. A whole bunch of billions of dollars worth of loans are going to go bad because everybody wanted to drill for oil just completely disappeared. So obviously they've accomplished it, what they wanted to do at a price. Obviously they're suffering, but it is rigged. So I really can't apply logic here. So I guess I would stop looking for logic.
Nic Chahine, options expert. He joins the show every Tuesday to discuss this week's options look. You can options outlook. You can also take a look at his product on Marketfy. He's the author of Create Income with Options Spread. Nic, always a pleasure having you on the show. You kind of temper our enthusiasm, either way in the market, and we certainly need that. Thanks for coming on. Have a great trading day. We'll speak to you later in the week.
Will do. Thank you.